Could Gilead be the best stock to be momentum trading right now? According to my system, it is definitely a very good stock, with it ranking number 2 here just behind Alibaba, but it actually looks better on all of the metrics when looking at the 20-day difference, the 1-day difference, the moving average, the volume, and the RSI. We get a breakout score of 10.93, suggesting that this stock could have a lot of momentum behind it. In this video, we're going to be looking at their financials to see whether or not this growth is sustainable, or if it is just an outburst in which is set to come falling down faster than SpaceX's rockets out of the atmosphere. So looking here on the day chart, we can see that they are well above all of the moving averages, suggesting that there is a lot of momentum behind it, which is obvious. And if we look here on the MACD indicator, we can see that we are in a long position and there is no signs of this slowing down at all. But when we look on Yahoo Finance, we can see a PE ratio of 300 at the moment, suggesting that this stock looks to be massively overvalued, or that investors are pricing in a lot of growth for the future. But I'm going to ruin this for you now. Right now, this stock looks massively overvalued. We'll get onto why later on in this video, but we can see here the earnings per share is 0.38 at $114. And on the 6-month chart, they are up 45%. This doesn't mean that this won't be a good stock to momentum trade, but intrinsically, I like to look for a reason for the stock to be going up. And of course, we'll get onto that later on in this video. So who are Gilead, however you say it? Who are they? What do they do? Well, they are a health company that specializes in HIV medication, which I wasn't actually sure there was such thing. I thought it was something which was incurable. For 35 years, Gilead has discovered and developed and delivered innovative therapies in areas of great unmet need, whatever that means. We helped transform HIV from a fatal disease to one that can be well managed. So yeah, it's not something that can cure it, it can manage it. We have helped cure millions of people with hepatitis C around the world. Our decades of research in emerging viruses allowed us to deliver the first approved treatment for COVID-19. So with this stock being a healthcare stock, it's quite fair to say that it can be very volatile, especially with clinical trials, as when these go wrong, it massively tanks the stock price. So that is definitely something to keep in mind with healthcare stocks like Novo Nordisk, when they had a shortage of, I forget the name of the drug now, the weight loss one, Ozempic, I think it's called. But it basically tanked the stock when that went into shortage, or if there is a bad clinical trial. So it is something that can have a lot of volatility behind it. The outlook for this company does seem to be quite good. I mean, it's a bit backwards, but the quarterly results were driven up by 16% jump in HIV drug-related sales and lower acquisition-related costs. Yay, but I don't know. It's not very good, because that obviously means that HIV is on the rise, but I guess it's good for this company, of course. With the California-based drug maker, adjusted profit rose from $1.9 per share from $1.72 a year earlier, handily beating estimates of $1.7. So it is obviously doing quite well. Now we are going to look at their financials. So to assess this company's financial health, we are going to be using my system here, which has taken into account liquidity ratio, retention rate, and free cash flow. And then obviously later on in the video, we'll get onto the intrinsic values and discounted free cash flow per share. And looking here on the liquidity ratio to kickstart us off, it is not looking very good at all. We can see a liquidity ratio in the recent quarter of 0.2, which suggests that for every dollar of debt in which this company owes, they have $0.2 to pay this back in, so 20 cents, which is not good. But when we look on their free cash flow, we can see that they do have a very strong free cash flow, which we will get onto. Retention rate is looking good, with the most recent quarter coming in at 16.6, and that was actually apart from the -2 quarters ago. We can see that that was the lowest quarter for retention rate. So their retention is really good, and trend lines are projecting this to only get better. If we look here on the free cash flow, we can see that this is obviously really good, and it is increasing quarter on quarter quite rapidly. And I think this is the reason for the momentum. To be honest, as we will get onto the discounted free cash flow analysis later on, we can see that basically this stock is just getting hyped up massively at the moment, and it is not a bad thing. There might be a kind of a bit of a lack of reasoning for it to go up so much, but we'll get onto that. So 365-day exponential chart, we can see that we are above the exponential trend line at the moment, suggesting that there is a lot of momentum behind this, and we can see that the volume seems to be somewhat rising with this, but not as much as I would like. In fact, I would say that is a slight decline, despite the price actually rising, which could definitely suggest that we might see a sell-off in this stock, and it is not that sustainable. If we look here on the 90-day basis exponential chart, we can see that volume is actually increasing. So as of recently, we might be able to see that this recent hike up could be more supported than it had been in the past, but that does make me want to approach this stock with caution, as it could mean that this stock could suddenly have a large sell-off. If we look here on the figures, we can see a PE in the top left of 316, a 52-week high of 114 and a low of 62, and the current price being set at 114.31. We're just a few cents off where we were at the high, and this is a current difference of $52. The beta for this stock is 0.23. So that suggests that this stock is actually not that volatile, so that could be a good thing, especially with the price going up. This stock was founded in 1987, so the retention rate does reflect this, and on the earnings per share, this is obviously 0.38, with a growth rate projected at 5%. According to analysts, we can now carry out a intrinsic value, and to do this, I'm also going to include here this surprise rate, which will help us understand where the analysts have gone wrong essentially with these figures. So this is not looking good at all, but it does get better when we move along onto the discounted free cash flow. But for this year's growth, this stock is massively overvalued, with its growth rate plus surprise rate only coming in at 6%. It's not looking good. On the left, most bearish formula, we can see we get an intrinsic value per share at $7. Obviously, with the current price being set at 114, that means the stock is massively overvalued, with an acceptable buy price being set at 5.3 with the margin of safety of 25%, but that is pointless to look at. But let's just look at the intrinsic value. So we've got 7.1 and 4.5 going on the mean. We have 5.84. So this stock looks to be massively overvalued, which for me gives me a reason not to buy in for this momentum, purely just because it doesn't look sustainable, especially when you pair this with the volume. If we look here, we can see on the Peter Lynch's valuation that we get a result of 0.01, which is really not good. And even when I add the dividend yield onto this, we still get a score of 0.01. So this stock just looks to be massively overvalued at the moment. If we look here on the discounted free cash flow analysis, what can we see? We can see here on a 9-year growth rate, we can see the price per share is set to be at $208, which is only about $100 higher than where we currently are. So that suggests that we are currently at around a 4.5 year growth rate at the moment, which suggests again this stock is massively overvalued. And on a 3-year growth rate, we are projected in 3 years' time to be at $69. This is just based off of their free cash flow growth. But annually, we have actually seen the decline of their free cash flow. So if this does start to climb up in a more positive direction, we can expect this to just get better. So it is kind of hard to go off of this metric at the moment, just because their decline in free cash flow is something which might not be that truthful going forward into the future. But I think for me, that basically sums up this stock. For growth potential, I think this stock is very unsustainable. However, you might be able to ride this momentum a bit and take a bit of profit if you are a momentum trader, which I do dabble a bit in myself. That's why it was brought to my attention. In fact, I don't know if I've shown you this yet, but on I think I have shown you this on the breakout indicator here, it is rated second, and it does look to be the best momentum stock at the moment. Of course, when the market opens on Monday, the exact opposite can happen, and I don't actually know when this video will be out. As when this is out, I'm probably away in Hungary, so I don't know when this will come out. We might have seen something completely different happen with this stock. But again, anything can happen in the stock market, and especially with these stocks with a lot of momentum behind them, it can suddenly swap round, especially if they are unsustainable, such as this stock. I hope you have enjoyed this video and found it somewhat useful. I'm trying to keep this as brief as possible because your time is precious. That sounds a bit weird, but I hope you have enjoyed. if you can leave a comment on your thoughts on this stock. Do you think this is a good stock to be momentum trading, or do you think it will come crashing down very shortly? Let me know in the comments, and I will see you in the next video.